The opening bells on Wall Street. I'm Yahoo Finance executive editor Brian Sozzi, and this is Opening Bid. All right, here on Opening Bid, we bring you the investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with your money. Let's get a look at where stocks are trading at the open and send it over to Yahoo Finance's Ali Canal at the NASDAQ in Times Square. Ali, I talked about it at the top very briefly. The rallies in some of these exchanges like Coinbase and Robinhood after that stablecoin news last week, I mean, they're flying off the chart.
Yeah, Brian, and I'll get to those movers in just a minute. But first, let's see how markets opened here. We're seeing the Dow Jones opening flat, NASDAQ Composite up about 0.5%, and the S&P 500 striking distance of that record closing high. We'll see if these gains can hold throughout the trading day. We are up about 0.2%. And as you teased, I have a few individual movers on my radar as well. So let's first start here with QuantumScape. That stock is soaring today after the company hit a major milestone in battery tech. They started producing a new part called the Cobra separator. So this is a key step towards next-gen solid-state batteries. So what exactly does this all mean? Well, these batteries could make EVs cheaper, safer, and longer lasting, but they've been pretty tough to build here. Now, QuantumScape saying that this breakthrough gets them closer to real-world production. So that's what I'm watching. And next up, I also want to take a look at those Robinhood and Coinbase shares. Both stocks there moving to the upside today. And these moves come after the Senate passed the Genius Act. This is that bill aimed at regulating stablecoins and expanding their use in markets. If signed into law, this could boost crypto adoption and challenge those traditional payment players. Several companies have already praised the bill, with Robinhood in particular calling stablecoins a big opportunity for its platform. So just a few names that I'm tracking this morning on a day when we could see a record high for that S&P 500.
You know what's crazy? Somebody probably got paid $1 million to think of a name like Cobra Separator. I mean, wow. I mean, that's that's the name.
Exactly.
I'll see you in a sec, Ali. All right, we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, it's day 2 for Fed Chair Jerome Powell on Capitol Hill. The Bulls ate up Powell's comments on Monday that included him not ruling out a July rate cut. Number 2, Nvidia's stock surging to its highest level since January. The chip giant stock is within reach of a new record high as the attention turns to its annual shareholder meeting today. So much for those Jensen Huang stock sales being a bearish indicator. And number 3, FedEx's guidance had 2 flat tires on it. The earnings call wasn't that great either. We'll dissect this economic bellwether. Here to break it all down, Yahoo Finance's Ali Canal is back. StoneX chief market strategist Catherine Rooney-Vera and the Informed Momentum company CIO Travis Prentice. Good to see you all here. Catherine, let me start with you here, and I want to lock in on the Fed because the market has rallied or started to rally around this notion. End of July, July 30th, we get that Fed decision, and it could be a rate cut. Is that the wrong way to play it?
I think it probably is the wrong way to play it, to be quite frank with you. I know a lot of economists, we tend to hedge, but I prefer not to. I think that Powell was very clear that he expects inflation. I think he's not wrong here, to filter through into goods prices by the end of summer, early autumn. The truth is that we do have tariffs, or we have had an increase in them, and we should intuitively expect some impact on pricing on the shelves. After the delays that we saw at the port of Los Angeles and all the different ports of the United States, that there was a disruption. So we should expect some increase in inflation on the goods portion of core PCE. And do remember that when you look at within the PCE context, you have services and you have housing and you have durables, or goods rather. Goods inflation was the only one that was actually negative. So if that flips positive, you do get an uptick in inflation. I think that's what Jay Powell is concerned about. And he's been pretty clear with that. So until and unless we see some pass through of tariff inflation on core PCE, I think he's on hold. So I think the best we're going to get here from the markets, and we may see the market somewhat disappointed, is at the back end of the year, September, maybe even December, first rate cut.
Travis, far be it from me to argue against Mr. Market. I mean, it's the market and it's me. I would like to think I'm powerful, but not as powerful as the market. But I just don't understand how the market could rally around this notion as soon as July we get this rate cut. I mean, we have Tariffs still in play. Oil prices are off the highs we saw a couple days ago, but so they're still up from the lows a couple months ago. Companies are out there raising price. CEOs are telling me, I'm raising prices 10 to 15% because of these tariffs and the threat of even more tariffs. Convince me that we're going to get that rate cut.
Yeah, well, I don't know. That's not my job to try to convince you about the rate cuts. I don't really have any idea what's going to happen. And I think there's so much noise in the system now that it's tough to make any prediction about the macro economic picture. But what we can do, and what we do at the Informed Momentum Company, is to really focus on stock-specific trends. And I think when you do that, there's some very interesting trends that are really emerging and accelerating right now in the global equity markets.
So do you ride the momentum? Not to have a play on your name.
Absolutely. We think momentum is a tremendous force in equity markets. It's one of the best performing factors in global equity markets. So yeah, we very much focus on what's working now.
Think we're seeing a bubble here?
Oh, gosh, I don't know. I mean, that's always tough to predict, right? It's always hard to know when you're in it now. But I do think when we look at the world from the bottom up, particularly in the U.S., which has been a kind of a basket case this year, the AI industrial complex is definitely showing very strong signs of a fresh new momentum move here.
Ali, you always following your work, always lighting up the live blogs for us here on Yahoo Finance. You know, we were talking about the moves we're seeing in the exchanges, Coinbase and Robinhood, but what if there's more behind it? I mean, this rally has started to really catch on a life of its own, and it's broadening out. I mean, this has to be good for some companies like a Robinhood, a Coinbase, even the banks. I'm already starting to wonder how the big bank earnings will turn out in a few weeks here if we continue to see this market rally. It's got to be good for the trading desks.
Yeah, and if the past is any indication, right, we continuously see tech leading here, but then we also recently have seen this broadening out of the rally, even within tech itself. It's not just the Magnificent Seven players. If you look under the hood of the NASDAQ 100, it's your AMDs, your Intels, Marvell Technology. Those stocks have made pretty significant moves over the past month, especially since those April lows. So I'm continuing to track all of that. It feels like momentum is on our sides at this point. And if the market is not going to be stopped at this point, after all of the negative headlines that we've seen from tariffs, Middle East tensions, that seems to be contained at the current moment.
I mean, we'll talk
I don't know what could stop it. True, yeah. FedEx, obviously a bellwether for the U.S., not doing too well right now. That speaks to the demand story out there. And, you know, tariffs are still a problem and a pain point for this economy, clearly a pain point for the Fed. So there's still things that could derail the current status quo. But I think right now there's a lot of bullish optimism.
Catherine, what do you make about tech starting to lead this market again?
Well, you know, one of our guests on the panel said the U.S. is a basket case. It's a pretty resilient basket case, right? I agree. You know, policymaking has been.
Is that even possible? What is a resilient basket case? Well, I guess it makes sense. Exactly.
No, I'm respectfully trying to push back on that because I really do think that the resiliency underlying the fundamentals has been there, and that's why. You know, you've had retail guys getting off the sidelines, putting their cash to work when you see the buy the dip, which really has played out this year. In fact, at StoneX, one of our biggest calls and probably our best call after gold this year was to go long at the peak of the tariff meltdown. And that's when the market is collapsing based on fear. And so we went long biotech and banks, actually. And that call since April 7th is up double digits. So right now what I'm looking at is I'm looking at playing the defensives because the equities market is back on track and moving higher. I am very much more bullish than I think a lot of people are with respect to, and have been since day one, I'm proud to say, with regard to the geopolitical risk to oil prices. I had a piece out yesterday that called the oil price shock that wasn't. The Strait of Hormuz was, in my view, not going to be shut down, and probably never will be. And it was the Iranian reaction was a far cry from that level of escalation, that catastrophic Armageddon type of escalation that would take oil prices potentially to 150 plus, and would derail the U.S. and global economies. So I'm generally more bullish. I do like, however, to protect position. And what I'm telling our clients right now is when you have return to risk, when you have the VIX falling, that's when you want to buy put options on your tech positions. Tech could move higher. I think you want to look at put options, and I think you want to look at second derivatives to the tech trade, which was our top performing recommendation last year, utilities, and I think we want to look at real estate industrial complex as a second derivative as well.
Travis, the word of the day for me so far is basket case. So what's making me feel like a basket case? I know I look all polished out here, but I'm feeling it internally. Is this move of Nvidia? I mean, Nvidia has really rallied, and I go back, it was just a couple months ago, and the earnings report wasn't good. We have a shareholder meeting today for Nvidia, may not say much. Are you a big believer in this Nvidia rally?
Yes and no. I think it's been very strong in the most recent past. Nvidia's performance over the last 3 months has been very strong, but over the last year, it's actually been a median performer versus large cap peers. But we do think it's very close, and I think the last piece of the puzzle for the confirmation of the next kind of big outperformance trend in Nvidia is that kind of 150 level in Nvidia, which was the prior highs that we saw late last year and early this year. So we're on Nvidia watch in terms of that confirmation of the new uptrend, which I think if it has a breakout above that 150, then that'll be kind of the last signal that needs to be in place. But Brian, I think we coined a term, resilient basket case. I think that's a good one for the U.S.
Yeah, well, yeah.
Given the big sell-off and the big rally back, I mean, it's only been beta and volatility which really mattered this year, which side you're on the risk on, risk off trade. So
if you want
I like resilient basket case. That's a good one.
Yeah, well, if you want to be a resilient basket case, I mean, where else are you looking at in tech? If Nvidia is not your vibe, we have these Micron earnings coming out. Where else are you looking?
Yeah, we think actually the AI kind of tech industrial complex has broadened out in this recent rally. So yeah, I mean, it's not that we don't like Nvidia. It's actually very close to us really liking it. But right at the moment, we think there's some stronger momentum in like Broadcom, IBM, Oracle, and even if you broaden out into the small cap markets in the U.S., you know, infrastructure companies like Sterling Infrastructure, you know, benefiting from the data center build out that seems to be just insatiable demand. So I think there's a lot more to play in U.S. markets and globally than just Nvidia. So it's not that we don't like Nvidia, we like it. We just like a couple companies better than that right now. But we always reserve our right to change our mind.
Yeah, as we all do. Ali, last word to you. You heard Travis talk about some really old companies. FedEx, one of those really old companies. Real quickly here, I didn't like anything on that earnings call. I don't like when I get onto a FedEx earnings call and they're telling me that China volumes have fallen off a cliff and didn't improve throughout the quarter.
Yeah, demand seems to be a big pain point here for FedEx, both domestic and global. And they're in the midst of this turnaround plan. They have a lot of uncertainties, macro headwinds. Obviously, the tariffs are not helping them out here. Maybe we could see a breakout if the tariff picture improves. But just looking at the stock, it's trading down 20% since the start of the year. It's below the midpoint of its 52-week range. There just seems to be a lot of bearishness on the street. And I constantly go back to that soft data, the survey data. We have improved off of those April lows, but consumers, Americans out there, they're still a bit pessimistic on the inflation side, on the labor market side. And if those expectations don't improve, that's going to bleed through into the purchasing behavior, that consumer behavior. And for a company like FedEx that has such direct exposure to the consumer, that's not good in the long run.
All right, good stuff, guys. All right, don't go anywhere. We'll be back on opening bid, and we will have our stock of the day. Your clue for this one, folks. I wear size 12. Plus, HPE CEO Antonio Neri. Welcome back to Opening Bid. Let's get a quick look at the markets here. A few minutes into the trading session. We're watching Nike here under pressure. Of course, Nike's reporting earnings there tomorrow. There, the major averages. A little bit of mixed action across the board. So really, of course, the market popped. Had a very good session yesterday. NASDAQ out there leading out in front. Of course, we're seeing big rallies in Nvidia, Coinbase, Robinhood, a lot of other key tech-friendly names. All right, let's turn now to our stock of the day. That is Nike. The sneaker beast will report its earnings after the close on Thursday. I can tell you investors aren't expecting much after Nike's dreadful earnings release and guidance 3 months ago. You could see that in a stock chart on Yahoo Finance as shares continue to lag relative to the S&P 500. Expect to see pressured profits as Nike clears out old inventory under new CEO Elliott Hill. Meantime, the earnings call will be combed for clues on the profit potential or the impact to profits from tariffs this year. Thinking tariffs won't be an issue, here's what Brooks Running CEO Dan Sheridan told me on the Opening Bid Unfiltered podcast.
An additional 20, 25 or whatever the conversation is massive. And, to absorb that as a business begins to take investment out of R&D, takes it out of consumer demand creation, takes it out of experiences. So we have to pass those on to the consumer, and you can't pass a 25% lift in cost completely.
All right, let's take a look live at the Yahoo Finance platform. We're looking at valuation multiples on Nike. Love this look. This is the Nike ticker page. I do find some of these valuation multiples on Nike absolutely bizarre. You're seeing Nike trade at a premium relative to the broader market on the forward price to earnings multiple and the PEG ratio. No clue what that is. That is the price to earnings growth ratio. Usually it's a wonky analyst stat there, the PEG ratio, that is helps to better assess future earnings growth potential of our company. Both of these metrics on Nike really quite high despite its weaker fundamentals. Travis, I want to go over to you. You're the momentum guy here. It's hard for me to get a feel of the setup on Nike. I don't think the market is expecting much, but if Nike comes out here and dumps another bad quarter on investors, even against lowered expectations, it's hard to see a quarter like that being embraced.
Yeah, I would agree, and it's tough to ask a momentum manager what they think about valuation, particularly when
hey, if you have a
Nike
thought on the
has
PEG ratio, Travis, by all means, fire away. I have all day. Well, actually, I don't, but you know what I mean.
I think what would be more interesting from just a momentum perspective is, we believe that momentum is best served when there's actually price momentum, which Nike doesn't have, but also fundamental momentum. So the confluence of both price and fundamental momentum is really what we focus on. And I think when you look at those kind of key factors with Nike, they have some work to do. So I think expectations are low that you could get kind of a one-off pop in the stock if it has a good earnings report relative to expectations. But for a more investable kind of medium-term trend, you got to see a little bit more work done on both the price and the fundamental side.
Catherine, you're always, of course, clued into all things economy. Is the consumer in good enough shape where a company like Nike could surprise to the upside?
Yeah, look, I think consumer discretionary really depends a lot on a couple of things from an economist perspective. One, job security, and two, wages. So both are still looking pretty good. So, and in addition to that, I'll add one other thing. We look at the Conference Board and the University of Michigan Consumer Confidence. Both took a tremendous dive during the tariff chaos, and have both subsequently rebounded in such a material way that, at least for me, and I believe for the entire street, we had big sell side shops calling for above 50, 60% recession risks. That's terrible for discretionary spending. Why buy the expensive Nikes when you could buy the cheaper whatever brand X? So I think that there could be opportunities in discretionary, especially when we see shocks to confidence that are not based on fundamentals at this point in the economic cycle. And if the Fed does start to react to the downside in terms of rates, I think we could get a steady Eddie type of economy in 2025 going into 26 without too much disruption. So I am looking for value. However, I don't see value in the discretionary space right now in terms of broad sectors. What I prefer instead is, if you're already long tech, which everyone generally is, if you're even in the S&P 500, protect those positions with defensive ones. So I'm talking about hedging risk, not liquidating tech, not liquidating your S&P holdings, hedging it with the purchase of, for example, underperforming defensives or even defense sectors, defensives and defense. I'm talking healthcare, I'm talking weapon manufacturers, I'm talking not just in the US, in Europe, in Asia. This is an industry that I believe is right now undergoing intense investment, spending, and likely to increase going forward.
Ali, real quick, last word to you. FedEx report stunk. You talked about it. Can't be a good sign for Nike.
No, and I don't think we're going to have a good report this time around, but there are some bulls on the street. Jefferies, for example, has a buy rating, a $115 price target. That implies 90% upside. And they say the worst has already been baked into this stock. They're actually predicting a V-shaped recovery by fiscal 2027. We'll see if they can get there. In the sneaker biz, it's all about innovation. We have that Pegasus shoe that's been doing well, some improving foot traffic patterns. So for Nike, a big TBD, but hopefully they can turn it around.
Hey,
I'm a fan.
Yeah, just slap a new color on it and charge me $300. I'm a buyer. All right, a big thank you to my contributors. Really appreciate it. Ali Canal, Catherine Rooney-Vera, and Travis Prentice. All right, for today's Power Player, I am locked in on Hewlett-Packard Enterprises. The company is holding its annual Discover event in Vegas to show off its latest technologies to customers, especially on the AI front. HPE CEO Antonio Neri is here with me now from the event. Antonio, always great to see you. Don't know how you made time for me, but I appreciate it nonetheless. Out of all the announcements that you have come out with here from Discover, the announcement with Nvidia and AI factories really caught my attention. Why is that such a big thing for HPE's bottom line?
Well, good morning, Brian, and thanks again for having me. What a great week for us here at HPE Discover in Vegas. I'm standing here on the show floor. It's 7 acres of technology on display. And after a great day yesterday at the Sphere where I gave my keynote. But to your point, yesterday we made a number of very strategic announcements. One of them obviously was the expansion of our AI factories with Nvidia. We continue to have a terrific partnership with Nvidia, expanding our solutions for sovereigns, which is an area where we see tremendous interest and growth. Obviously, the continued CapEx investment in service providers, as well as the continuation of the model builders, and then enterprise. And enterprise here, we have more than 12,000 customers visiting us this week, and they are all interested to accelerate that journey to AI. And that tells you the interest is super, super high. And that's with NVIDIA, we have co-architected and co-engineered a solution that's easy to deploy for time to value.
Antonio, KeyBank out with a good report here today. They surveyed a lot of CIOs who are out there buying tech. They are noting the slowest IT spending growth outlook since 2020. How is that starting to take shape in your business?
Well, look, we don't see a slowdown in the IT spend. In fact, if you really follow the last few quarters of continuous revenue growth, you see that the momentum is across all line of businesses. Look, to deploy AI, continue your journey to a hybrid cloud experience across your enterprise, you need more networking. And so networking has clearly recovered in the market, and we see that in our growth, in our orders, and now in our revenue. GreenLake has been positioned extremely successful to be that bridge to provide a hybrid experience, and we continue to grow on an average of 35 to 45%. And this week we announced the agentic approach to our GreenLake cloud. And what they're very interested is using GreenLake as an intelligence, meaning we can bring to them an army of AI agentic capabilities, so they can remove people that are in the loop and put them on the loop. And so those actions can be taken by AI. So I haven't seen that, honestly, Brian. But obviously, there is a lot of uncertainty in the market. There is always geopolitical tension, but IT will continue to be a top of mind for enterprises.
Antonio, before we let you go, I know you're a busy guy at this conference. July 9th is the Juniper trial. Would you assign any probability to this, I guess this trial not actually happening, that the government drops its case and lets you take battle versus Cisco in this market?
Well, look, everything is possible. We continue to work to try to work a remediation sort of settlement. But fact of the matter is that we are so close to the trial. Our view is that we believe this is pro-competitive. We believe this is good for enterprises. Remember, we don't support consumers. And ultimately, we believe we will prevail in court if we have to go all the way there.
All right, we'll leave it there. Antonio Neri, good to see you as always. Good to see that HPE stock symbol behind you at the conference. I'm digging it. Put something on black for me in Vegas. We'll talk to you soon, Antonio.
Will do. Thank you.
All right, coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves for the trading day. You do not want to miss it.